Hi, I'm Brian Birch, and I'm just back from an insurance ERM conference on insurance, reinsurance, life insurance, and an accounting standard IFRS 17. And you may wonder, how do I get to have all the fun? But don't worry, I'm going to try and summarize some of it for you now. I've summarized it. Still got 106 points down here. So it shows a certain level of the detail that is in the IFRS 17 standard, and just what effort is needed for a successful project. In a way, that is the big message, that there's just an awful lot in this. People talked about thousands of scenarios, that really there can be a lot of different ways of looking at this. People talked about millions of contracts that some companies will have to look through, and a very large amount of computer power that is needed to process the new way of looking at accounting profit. People talked about looking at the contracts and having a process that was consistent. That one of the broad benefits of IFRS 17 is there can be that consistency, and in a different part there is challenges. There still need to be rules in order to treat things that are essentially the same thing in the same way, as opposed to having very different treatments for basically minor differences. We talked about some detail, the unit of account, the VFA is one of the measurement models. You may need to test contracts at that individual contract level for profitability if you take on a book of business. That was news to me, but obviously that would be a lot of work to do that. We talked about valuing things at fair value at transition, understanding the numbers, the actual numbers, rather than the theoretical part of it. If you acquire a business, especially life and with profits business, there are those very difficult or detailed checks that may need to be done. There was a bit around asset and liability matching and segregated funds, and would the asset mix change. So a few ideas there that you may have extra areas or changes that are not quite directly obvious from actuarial and accounting straightforward changes. Would there indeed be some restructuring of a business because of a desire to have some bits outside IFRS 17? Possible. Wasn't a big topic. If contracts change onerosity or go from profitable to unprofitable, or the other way, what are the processes needed for that, and what are the accounts indeed needed for that? Having a strong project manager with little political bias seemed to be a useful thing. Other points on project management is the potential of having relatively small chunks and do something, then look at what you've learned, see the big picture, get actual results, discuss it. So there's an element of agile in that, rather than have a huge plan, try and do it, and realize that a lot of your assumptions weren't right. Somebody talked about mock assumptions, which I think were temporary assumptions that you know may not be right ultimately, but they are useful to be able to cope with this stage of the project. Having a testing plan, having methodologies and clear policies around risk margin, interest rates, things like that, seem to be useful to help structure and get and move forward with a project. There was quite a bit of talk about collaboration, having actuaries and accountants in the same place, having a lot of discussion, and not just having handovers from the other person. That actuaries need to know debits and credits. Accountants need to know more about what the actuaries do. Quite a lot of interaction, and that companies could tell, consultants could tell the companies that had got that right, and they would see differences and difficulties if the company hadn't done a lot of that. We talked about buy versus build accounting software, and actually that maybe that's a false dichotomy, a false set, that really it's quite likely you're going to be building some things and buying some things, spending a lot of time configuring the things that you build, because of the way they're made, and because of the need to tailor it to your particular business. There are a few notes about profitability and understanding the profitability and what affects profitability is a journey. There's a few points of communication. Communicate was one of them, which is partly why I'm doing this video, to over communicate, to do a lot of helping people use the same language and make sure they get to react against things, to understand things. One big company did videos for non-finance people. I'll link one if I can below, with the view of helping everybody understand what's going on and what the sort of changes would be. Profitability, there'll be new key performance indicators potentially that actually it may take a long time to understand what these should be. They're quite likely to be related to the contractual service margin, a form of unearned profit. Understanding what discount rate differences would be, understanding how the different dynamics of profitability affect the business is useful and may take some time, both internally and externally as well, understanding what analysts and investors want. On that point, there may take a while. There may be an initial some initial problems, or because people may not understand insurance business straight away, but over time there were big benefits. Another point is to have very good relations with your software vendors, that there'll be a lot of learning, a lot of problems to be worked through, and learning from the things that you've already done. So think about that as well as the sort of features that your software has. Hope this has been useful, and good luck with your project.